All right, let's do a sound check. Sorry about the delay. I'm trying to get the simulcast up at the same time. I can never say that word, simulcast. I need to practice that. My Ben is looking a little funky tonight. All right, it's just going to be funky. It'll just be a funky banner tonight. All right, how we doing on sound? Doing okay? Sounds like Dave Landry. All right, let's get started. No matter how much time you have, it never seems to be enough, huh? All right, sound is good, correct. Thank you, John. Thank you, Brian. All right. Hello, one day is Thursday, December 5th, 2024. This is the week in charts. I'm just going to thank all you guys and girls for attending. I appreciate you taking time out of your busy schedule. All right, what are we talking about? Well, current market conditions, obviously. Your questions on trading, and you can just type those in. I'll be happy to field them as time allows. And your favorite stock or crypto picks. As we get to the end of the show, I'll make sure that we have everything, except for you clunking around. Yes, sorry. All right, I'm moving around too much. All right, let me take it. Your favorite stock crypto picks, just type them in, and when we get to the live charts, I'll be happy to look at them. I got quite a few things. The new mystery chart, it should be mystery charts, and the TFM 10% update, Landry 100, just a whole bunch of stuff to talk about there. And I had a question on the number of setups that I've shown over the last few months, and it's really more of what trend following is all about. And this is something I could probably expand upon quite a bit. And that's going to make a lot of sense when we get to it. So at the last minute, I'm like, well, what was the question really about? It was about on number of setups. It was about on kind of like a money and position management type of question, ancillary setups, and so on and so forth. And all that makes sense in just a minute. It's a rather long, lengthy question. But anyway, Q&A again, type your questions in. I'll be happy to get to them. There's a disclaimer screen. As you know, you can lose money trading, or as I'll have to sum it up, all predictions are about the future, and a lot of stuff can happen between now and then. That's from my buddy Greg Morris. By the way, if you're watching on YouTube, there is a bit of a delay in the broadcast, so I will catch up to you first chance. There's all my contact information. You can also reach me at davelandry.com. Looks like Dave Landry needs a haircut. That's what my wife tells me. All right, let's talk about the mystery charts and the methodology in action. So we have 3 new mystery charts this week. This is, I almost said its name. As you can see, it's in a nice uptrend. It's pulled back to the 30 EMA, which is a Landry light pullback. Super simple pattern there. You're just simply looking for Landry light, which is the lows of the bars, as you can see here, greater than the moving average. And again, this down here does not measure magnitude. It just measures the number of bars. So we're right at about 50 bars or so. That's a long, long time without touching the moving average. And the thing about Landry light is it's just I'm going to geek out on you here, but it's just a really cool indicator. It's one of the simplest things. I discovered it many, many, many years ago in 1995, I think, or 1994. I know I wrote an article that got published late 95, early 96. I tend to lose track of the years now. It's been so long. But anyway, after that, somebody pointed out they called it daylight because you had daylight between the charts. And I started looking at more and more and more charts, and I was just amazed at what a great little indicator, so to speak, or illustrator, as I like to call them, it could be. And as I've said before, I've been in presentations where you have these guys show hundreds of buys and sells, and I don't want to take anything away from them because their system might work. But what's amazing is a lot of times they always have the ubiquitous moving average on the chart, and it could be any moving average. And what's amazing is that the entire trend that they're talking about, all the in and outs, they might have 100 in and outs, but if you look at the entire trend, it would have been caught just following something simple like Landry light. So I'm a big fan of simplifying things as much as possible. And who was it? Rolf? Do I have his book handy? I don't think so. It's around here somewhere. This office is a mess. But anyway, he said sophistication is the end of a long, arduous journey, and that's paraphrasing him, not the beginning. And I find that really interesting because I, like anybody else, went on the Holy Grail hunt and have come back to these really, really simple concepts. So Landry light pullback, just looking for a pullback to the 30 EMA, and that's it. And you could use your favorite EMA for that, or moving average, I should say. It doesn't have to be an EMA with a TFM 10% system. As you know, we use the 50, and I'll show you that in just 1 second. So the entry was there, the stop was here, or is here. Okay, this one hasn't triggered yet, and the IPT is off the charts, but I just put it in there so you know that we do have initial profit target in place. Here's another one going into Friday. You can see it was in somewhat of a gradual uptrend or worked its way higher. It depends on how you want to look at that. But then it really began to accelerate higher. And that's one of my favorite patterns, is when you have that second acceleration, that second gear, so to speak, happening in the charts. And notice that it made a TKO type of move. Now, TKO wasn't huge in this particular case. I usually like them a little bit bigger. And I'll show you one in just 1 second that's a little bit bigger that could work out nicely. In fact, it's the next mystery chart. But anyway, entry was there, stops there, and then again, the IPT is off the charts. Pretty wide stop on this one, percentage-wise. I mean, when you look at the charts, it doesn't look that far away, but percentage-wise, it's pretty big, and that's because it's a very, very volatile stock. So here's the textbook TKO that I was talking about a second ago. This is what you want a TKO to look like. You want a big, wide-range bar down, like you have here. And notice that, again, gradual uptrend, nice acceleration. And then we have what I call a textbook TKO. And that's when you have a nice wide range bar, and it starts at one end and it closes on the other. I don't know if I got a long chart on here by accident. I do like to use arithmetic charts as opposed to log charts. Maybe if I'm looking at 100 years of the S&P 500, I'll switch to a log chart. But for the most part, I like the arithmetic charts. Anyway, you might notice, well, the entry would be here and the stop would be there. That's why I call it textbook TKO, because everything's kind of figured out for you. And what you do is you get in right above the high of the TKO bar. You set a stop right below the low, okay? And so the entry, or the high, minus the low, or your stop, I should say in this case, would be the distance that you'd want it to travel if it triggers to the initial profit target. So let's say in this case, just eyeballing it, that's about 4 points, okay? So if it triggered 4 points above the entry would be your initial profit target. And I'll follow up on this one in coming weeks. Now, if you have a good eye, you might notice that we did lose some momentum in here. And in general, I'm not a huge fan of markets that lose momentum. But in this particular case, I like the knockout move, and I think that may have shaken some people out. And I think that actually kind of contributes a little bit to the setup. So people were like, okay, it's still okay, it's still okay, it's still okay, it's still okay. And then all of a sudden, bam, it's not okay. So these people get knocked out of the market. And the beauty of something like a textbook TKO, again, starts at one end, ends at the other on a wide range bar type of move, then you know where your entry is, you know where your stop is, and the chances of it triggering aren't fantastic. And there's nothing wrong with setups not triggering, and I'm going to get into that in just 1 second. Anyway, the great thing again about them is everything's kind of laid out for you. Some of these other setups that I have, it takes a little bit more work it's a little bit more discretionary, where this is almost somewhat mechanical. Oh my God, we're not getting charged. In the future, could you tell me about 20 minutes earlier? No, I'm just glad you finally did. Okay, I should know that. All right. Well, I'll have to fix that in post. Mother father. All right, thank you, Brian. Well, I'm glad somebody said something. Okay, so everything I just said, I hope you remember it. There we go. Gradual uptrend, accelerated uptrend, textbook TKO. and then a gradual little rollover. How many charts have we gone through so far? We've gone through enough. All right, I'll fix that in post. Mother, father. So anyway, let me just go through this one real quick. Gradual uptrend, accelerated uptrend, textbook TKO, entry, stop, and everything I just said. Okay, fantastic. All right. In the future, you should see charts from the first slide, but I'll be better on that. All right, we have a mystery chart reveal, and this is SGMO, and you can see that it had a nice Landry light, and it pulls back to the moving average. Nice deep pullback, and this is again a Landry light pullback. Nice breakout, nice accelerated move. It kind of broke out, and then it accelerated higher. It pulled back to the moving average, and this one really isn't doing much just yet. Here's all the parameters. There's the wolf parameters. We just, I think we talked about that one a second ago. If not, we'll get to it. But the entry is 240, stop 150, IPT is 330 and 0.90. By the way, if you want a blank spreadsheet, I can give this spreadsheet to you, and you just simply put in your parameters for what you want, and all you have to figure out is the entry and protective stop, and everything else is figured out for you. It's just mathematics. Anyway, entry there, stop there, IPT up here, and this one has triggered. So we'll see what happens, and I'll follow up with it in future webinars. Yeah, sorry about the slides. If you watch a recording of this, that'll be fixed. All right, 10%, TFM 10% system, where are we now? So again, these zones, and I know not to beat a dead horse, but if I don't mention what they are, I'm going to get a lot of questions. These are based on the 50-week close, okay? And this line, the top of this would be the 50-week close. So today we closed at a 50-week closing high. Notice that the top of that zone, the green zone, went higher. This is the 5% line. Anything here or below is 5% or more below the 50-week closing high, and then the 10% line. So the 10% line down here would be a place where you want to think about getting out of the market if it closes below that and the moving average, and that's it, okay? And there's the rules for sells, and the initial designer's intent with this, as I've said 1,000 times, is to avoid, as Ian McAfee used to call them, the diaper change moments when the market just absolutely implodes and everybody runs for the door at the same time, and things get really, really ugly when that happens. So this was the last sell signal. If you just look at those rules, you can see why a close 10% or more away from the 50-week closing high and below the 50-week moving average. It's a simple moving average in this case. And by the way, the reason I use a simple moving average, I said I won't get into the details a year ago. The reason I use a simple moving average is I wanted to build a little lag into the system. Believe it or not, it's just the opposite of what most people try to do when they're selling you a system, is telling, oh, it doesn't have any lag. It's forward looking, bullshit. All right, just demonetize. All right, now I can say shit. Anyway, bar 1, bar 2 of Landry lights, and the buy is there. So that's my whipsaw filter. On the sell side, it just has to get below the moving average. On the buy side, a little bit more stringent because it does take a while for a market sometimes to get going, but they do slide faster than they glide. And if you're a pilot, don't email me and tell me that the glide goes down. Just imagine that you're gliding up on a thermal, okay? Anyway, the buy was there, and it's had a pretty good run ever since. And the Qs are even more impressive, as I'll show you here in 1 second. Now, I really want to get into a lot of the nuances of trend following, and we're going to get into quite a few of them in just 1 minute. And I thought I would be able to get to more and more of them, but there's just not enough time to cover everything I wanted to cover tonight. So I'll pick some of those nuances up over the next few weeks and then forever, as I've done in the past. But one of the nuances of a longer term trend following system, in addition to your drawdowns being abysmal, is your accuracy will be really low too. So those two things working against you. And that's why somebody like the Turtles did incredibly well for a while, because that market was just blowing and going. It's kind of like trading the shit coins right now. You're going to print money and look really good. There's a friend of mine, a Jim, young guy, and he came over. I'll show you one of the trades we did together, or at least I did it in front of him just to show him how it works. In just 1 second. But the next day he tells me he bought some crypto that he heard about on Twitter, and you got to buy one Solana or something so you could buy it through a wallet. It just seemed like a big old mess to try to do this. And I think he tripled his money overnight. And so that's going to be, where am I going with that? That's a market that's just kind of going crazy right now. And I know where I'm going with that. And a market like that, just buying breakouts, just basic trend following, like the turtles did the breakouts, you'll absolutely print money. Now you have to know a lot about money management, which I don't think he does. I think he's more interested in a quick buck than really learning about trading, because there's a lot to learn about trading, although it does look really easy at times like these in something like shitcoins, and we'll get to those just one second. SHYT, by the way. But anyway, the other thing I want to show you here is, notice that the zones are moving higher. So every time you hit a new 50-week closing high, those zones pop a little higher. And I think Jeff's here tonight. Yeah, hey Jeff. Jeff is one of my clients, and he pointed out that he likes to get out when a market drops 5% or more. When I say market, I'm talking about an index, the S&P 500 more specifically. And his reasoning is he'll just get out the way and ask questions later. So like right here, that would have been a sell signal based on 5% drop. And right here, it depends if he's using a closing basis. If he's not using a closing basis, then he would have survived that area there. I find 10% tends to be a good round number. And obviously there's no guarantees, and I'll give you money back because it's a free system. But this system, from what I've seen, and I'd love to know when I initially published it, because I'd love to go back in and see how the walk forward testing has done. And in fact, well, I know how some of it is done. I'll show you that in just one second. And but I'd like to know the exact date that I made this public, so I can go in and see how the future returns, the walk forward returns did compare to the historical returns. And I did get in a fight with somebody once, not a fight, just a big systems designer. I told him once that his biggest drawdown was always in front of him with the system, and he got mad at me. And it's like, well, it will be, believe me, because it happens. But anyway, notice that the zones are moving higher, so that's obviously a good thing. Okay, using moving average off. Okay, so Jeff also uses the moving average. Do you use the 50-week moving average? Yeah, he said he didn't get out in this last dip here. Okay, so if you're using the 50-week tube, then only when the 50-week is above. See, this is good information, Jeff. I'm glad you're telling me that. So Jeff might be onto something here, okay? So I figured 10% was a good round number, and the 50-week moving average is my whipsaw filter. But notice for nearly this entire trend, the 50 is actually below the 10% line. But over time, through the drop-off effect especially, this 50-week moving average will start moving into those zones, because you're dropping off crazy lower prices, I guess 25, 30% lower prices in this particular case, 60% into Qs, which I'll show you in just one second, and you're adding in these much higher prices, so that moving average will start catching up to price more and more and more. But that's interesting. Okay. Oh, using a 30. Okay, so you're using a 30 simple or exponential. Okay, Jeff's gonna let us know what he's using there. Okay. Yeah, a few questions coming in. We're gonna get to them as they relate to the charts. Okay. Okay, here's the Qs for S and Gs. I thought it'd be fun. I know you want to party with me to buy 100 shares. I'm like, what the hell? You know, I've got a signal here. I knew I had a signal, and I said, well, let me just make a quick back test on this. And I just kind of went in and looked at it and said, you know, it looks pretty good to me. So I went ahead and took the trade, and I just bought 100 shares just so we'd have something to talk about. I never dreamed it would go this far, and I took the drawdown sheet out. I'll put it back in next week, but the drawdowns are pretty tough in here. There's some $6,000 and $8,000 drawdowns on this silly little 100 share position. And like the hokey pokey, that's what longer term trend following is all about. And that's why, by the way, we take a hybrid approach, which I'll harp on a little bit more later in the program tonight. but we take partial profits when we hit that initial profit target, just in case that's all we get. In a lot of cases, that's all we get. But the real money is in the longer term trends, as you can see here. So I just, to my shock, I am up $206.32 on this position, which equates to almost a 65% run. And on that silly little position of just 100 shares, that's a $20,000 gain. It's like I've looked at it over the past few days, and my equity, I'm going like, is that really $20,000 in that position? And should I get stopped out now, and I'll talk a little bit more about drawdowns again next week, that would be a healthy haircut going all the way from 521 all the way down to looks like 59. So I hate to use the word hope. So hopefully all these numbers will catch up to the price, or just even better, price will go higher and higher and higher. But it will be a bit of an ouch when it gets hit, but that's what trend following is all about. And there's been quite a few ouches in this along the way. All right, real quick, I just want to show you what I've been talking about lately with the Landry 100. And as I've said before, I did this years ago, and for various reasons, I quit doing it. It's not a tremendous amount of work. I do enjoy doing it, but I think back then I had some extra tracking software, which made it all work a lot better. But anyway, all these stocks were just bought at brand new highs. That's the entire system right there. Now, I do put a little spin on it, so I guess I need to fully disclose this. What I'm doing is I'm sorting the new highs by historical volatility, okay? Which I have for TC, I have for Metastock. I don't have for TradingView. I'm sure somebody has it for TradingView. One client has the code, or was working on the code. I was helping him for Nirvana systems, so he has that one. So if you have a package and it doesn't have it, let me know. We'll see what we can do about that. Stock charts ACP, it's called Landry Volatility. I didn't invent it, believe me. They just put my name on it because it's with the plug-in package, which is free, by the way. And I might actually tell them to start charging for that. It's been free for about the last 4 or 5 years, but maybe it's time to charge. I just figured give everything away and make it up in volume, you know. Anyway, so all these were bought at new highs, and I was kind of shocked a few days ago. This APP actually was over 300%. Now it's at 288. Now, there's no profit taken in this. This is a breakout type of trend following system. And I think the reason it works is because there's 100 stocks. And I think it was Jeff or someone in here knows a lot more about statistics than me. And he was trying to figure out whether or not we can make a smaller universe of these, because it is kind of hard as an individual trader, at least, to go in and buy 100 stocks. Maybe if I have an extra million laying around someday, which you don't have if you have kids and pets and family and all that other good stuff and hobbies, I might put 10 grand into each one, and I think that'd be a lot of fun. Again, I don't know, part of me. By the way, I do treat cash as an asset class with this. So when the market starts getting choppy, if I can't find 100 stocks, it might go down to 50, it might go down to even less. But to my amazement, this one's up 288.5, and that was bought on 9/11. So this day here, it made an all-time high, and it pretty much never looked back. Now, keep in mind, a lot of these, I'll buy them at brand new highs, and the next day they get absolutely creamed, okay? And then they consolidate, and a lot of times they take off again. And that's some of these huge winners in here that you're seeing did exactly that. So that's about 300%. So I think if you just bought on an individual basis, if you just bought a few of these, your chances of capturing that 300% move are very low. Okay. Okay, Keith, that's a good question. And in fact, I'm glad you reminded me of that, because that's the next thing I wanted to throw out there. I'm not scaling out of any of these, and I thought about it. Again, this is all sort of hypothetical, although I track it every day using real numbers. Okay, and one thing I did think about is maybe exit half if you're up 100%, And so now this one's up 300%. So I just want to see where it's going to go. And right now it's all for S and Gs. I think in the real world, it wouldn't be so much fun and easy to run. And yeah, that's a good question. So should I, and I'm kind of opening it up for discussion, should I sell a half of the position when I'm up 100%? In that case, in that way, you'd be free rolling. And that's something that I strongly believe in on an individual stock trade basis, on something like a Landry light pullback and things like that. So good question. I'm glad you reminded me of that. Okay, so we'll skip the million little things this week. I do want to talk, there's quite a few things I want to talk about there, such as cash is not trash, and maybe know the nuances of trend following or whatever the methodology you're going to trade is. But we'll get to that. But anyway, I received this email from a gentleman, and I'll show you my reply, and then I want to elaborate on a lot of these things, okay? He says, I've been a member of your paid service for 5 months now, but have followed your recommendations off and on for 20 to 25 years. Well, thank you. I have said many times lately that we should see a plethora. You have said many times lately that we should see a plethora of setups soon. I have never seen you with a plethora of picks. In 5 months, you've only had 5 stocks that have triggered. That's about 1 per month. Well, my reply was quality versus quantity. I'm going to also explain to you why we didn't have that many setups. And it's also okay if you have a setup and it doesn't trigger. And it's also okay, again, to sit in cash. In 5 months, I've noticed that your recommendations have hit their IPT quite often. I think all but one did. Once they hit the IPT, they fizzle and we get stopped out. Jury's still out on Clove and ZK. Both of those pretty much hit the IPT and stopped out. We made a little bit more on the second loaf on one of them. We'll take a look at that in 1 second too. If a person would have sold 100% of their position at the IPT, they would have made a lot more money. He is correct. However, if you're not positioning yourself for the potential for unlimited gains, you're not going to make money longer term trading. And you might want to write that down. And I'll beat the dead horse some more on that in just 1 second. So my point was, plot the market. It's been all over the place. When the market is all over the place, or like now, this was probably 3 weeks ago, I got this email. I've been meaning to do a presentation on it, but Thanksgiving and everything kind of threw a wrench in those gears. But back then, there was a super crazy vicious sector rotation right about the time he sent me this email. So it was hard to catch these longer term trends. You'd find something in a trend look pretty good, and then that sector will become a victim of the sector rotation. Now, they do come along, and that's why we chip away at it. And as Dakota sang in the Whipsaw song, one good trend pays for it all. Now, also keep in mind, I get complaints about too many setups whenever things are working nicely. We have 3 setups, those 3 mystery charts I just showed you. We have 3 setups going into tomorrow, and we have 2 that have triggered that are in live portfolio. So we could end up with technically 5 setups in the portfolio. Now, another point that I often tell people, 5 months isn't that long. It can take 6 to 8 months, and unfortunately, occasionally much longer to catch some great trends. Unfortunately, they don't come around every day. Now, I didn't check his date when I got this email or reply to it, and I knew that he came in right around the time that we had NNE, and I was worried that he might have missed that one, but he actually came in afterwards, and I'll elaborate on that in just 1 second. The point there was that we did make 128% on the second loaf of that, and then I have receipts. Now, this is one thing, like I readily admit, sometimes I really suck and will admit it, and when I do kind of begin to suck, so to speak, like that, what will happen is I'll take a step back, I'll look at the market, I'll look at the sectors, and then I'll keep looking at those 2,000 stocks every day. And I'll just say, are you trying to make something happen here, Dave? Are you trying to force the issue? And then I'll become more and more and more selective and sort of self-correct. And I think as traders, we all kind of go through that process a little bit. Maybe we try to push the envelope a little bit, make something happen, especially when things haven't worked out that great. But anyway, sometimes they really suck, and I'm fairly proud of that period, even though we didn't have a huge amount of winners. And I think in the back of my head, I was thinking that NNE was part of that string of winners, that one big trade that pays for it all. In fact, that one actually is disappointing because it made this one and done type of move as opposed to going longer term. So my point was that I was especially proud of that period. And again, I thought that big winner was in there too. But also the market, again, being all over the place. We'll talk about that in 1 second. And it was summertime. But this summer wasn't too bad, but summers can be fairly bad. Let me check in on YouTube real quick, and then I'll be right back. Okay, so his point was that all these stocks were hitting the IPT and then coming right back in. Now, as I said before, when that happens, I get a lot of emails saying, Dave, why not take 100% of the profits at the IPT? Well, the reason is if you do, you'll never catch that occasional big winner, which is important. And if your methodology does not allow, and believe me, I got my ass handed to me not that long ago. I got in one and looked pretty good, I thought, and I lost 90% overnight, okay? Unless you have the potential to make 100% or 200% or 300% or whatever on a trade, you're not going to pay for those losses. This could take you a long time to pay for them. There's an old, not to be crude again, but there's an old commodity adage that says it's the best. You can't eat like a bird and shit like an elephant. You can't take little tiny pieces and then get your ass handed to you and lose 90% on a trade, okay? Reverse it to the B trading, selling options, selling naked options. And I see these idiots. There's some kid, he looks like a kid. he's all over my YouTube feed in his paid advertisements, of course. He comes up with the same old argument. Well, 80% or 90% of the options expire worthless. Well, you know, that 10% will kill you. And Greg Morris makes a really good point. If you, let's say you have a system that's 99% correct, okay? And unfortunately, that 1% could be really bad, okay? And just because the probabilities are low, and believe me, I've seen stuff work a long time, years before blowing up. Although, as I've said 1,000 times, people will present me with an anthill type of strategy, and anthills like an ants build little mound, you know, one little piece at a time. They build this substantial mound, and then one big footprint knocks it all out, and they got to start over. Provided, of course, well, you have to start over. Provided, of course, you have you're not shaken too much monetarily and, more important, mentally. But anyway, getting back to Greg Morris, he equates it to playing Russian roulette with a gun that has like 100 chambers. Okay, well, there's only one out of 100 chance of killing yourself, but that's enough to make you think twice about doing that. And sooner or later, that 1% will come up. So anyway, when chart after chart looks like this, why did I take 100%? Well, that's why, because you need to position yourself to occasionally make a lot of money. Now, when we finally do catch some good trends, and I don't want to make it sound too elusive, but I want to try to keep it real. And, you know, people go out there and get fleeced by these gurus. Come back to me. Let's keep it simple, and I'll show you everything. Let's do this together. But anyway, so when we're blowing through that initial profit target, that's what IPT means, by the way, people are like, you know, Dave, if we just held on 100% of the position, we'd have made so much more money. Why do we hold on 100%? Well, because you don't know, just back it up one slide, you don't know if that IPT is all you're going to get. This way, you put a little money in your account, keeps the lights on, right, while you're waiting on those big winners. And that's the secret to trading, by the way, is biding your time until the big winners come along and not putting capital into harm's way as much as possible. Some of these stocks you did not recommend, but you took small positions in, like UPB and GRDN. I need to look up UPB. I don't seem to remember that one. I do remember the GRDN, and I did buy that one. I just checked my account, and I do still have half of that, by the way. But Miss GRDN, as it was never brought to my attention, you mentioned it because of light volume, or on these, do you prefer to mention them only in the Facebook group? Okay. The trading service, what I call my core methodology, is a fairly specific methodology. Okay, it's like you need so many bars above the moving average and then a pullback to the moving average, or you need that TKO bar to look a certain way. You need the stock to be accelerating, persisting, and all these things I talked about when I did a stock selection course a few years back. It's probably time to freshen that up again. I just don't feel like putting the studio back together. It's a lot of work. But anyway, that's a very specific type of methodology. Now, outside of the methodology, it's still trend following, but in the something like IPOs, like the GRDN, we're playing like the buy at D pattern, and John Ross has really taken the ball and ran with it, or run with it. I always get those confused. I need to work on that. Makes it really difficult to learn a foreign language when you're not too good with English, right? But anyway, that's a little bit somewhat outside the methodology because it's slightly like a breakout type of play. But it is something that I enjoy doing, and we get a lot of good information off the Facebook group on the IPOs, and we share a lot of good stuff there too. But so that's sort of outside of the core methodology, and you could do quite well with those things too, with something like the IPOs. Oh, I have, okay. So he goes on to say, because of the size of my account, I have other investments, trades, options. I have too much money in cash. Cash is not trash, okay? Cash is the worst performing asset class over long periods of time. Yeah, but when the market goes down 56%, 50 or 60%, I know you can short, but shorting is another can of worms. And we do short. I'll show you a couple of shorts that we did here in just 1 second. I'll give you the tickers at least. You seem to like being in cash. I love being in cash. I also love putting money to work, okay? But I have no problem sitting on a pile of cash. And over the next few weeks, maybe next week when I get back to the Million Little Things, I'll dig out some Livermore, I'll dig out some Selden, and whoever else I could think of, some of these old timers for 100 years or more ago that talk about the importance of sitting in cash. If you're sitting in cash and you're patient, when that opportunity comes along, you could pounce on it and make a lot of money. If you're busy allocating that cash because you think cash is trash, you're going to be in a lot of trouble mentally and monetarily, probably. And when those big opportunities come along, you either won't have the cash or you won't have the you won't be in a proper state of mind, is what I'm trying to say, to take it, okay? So I said, I have no problem putting money to work. As mentioned above, there are times when I get complaints because people can't keep up. I don't want to get too excited just yet, but it sure seems like we could be entering that phase again. Well, tonight we have 3 setups, so maybe that's beginning to happen. Now, a couple things I want to point out. He asked about the GRDN. So this is where I bought it. And I have to go back and look at the post because I literally put this in 2 minutes before we went live, and I just checked on the trade. I got it long here, and I didn't get shaken out on this opening gap reversal. I stayed with it, and then I took partial profits on this one already. So a little bit of the funky setup. I could see where you might have gotten shaken out on that. It's not a beautiful kind of textbook type of position management or whatever, but I did hold through that little bit of a spillage there, whether you agree with that or not. It was an opening gap reversal. I wish it would have closed a little better, but I figured it was worth a shot. Anyway, so I got in that one, and it's sort of a buy at B. I guess technically, let's see, 1, 2, 3, 4, 5. The buy at B would have been on this bar here, but the range was a little low on that bar. Okay, so I like the fact that, you know, maybe that needs to be a rule, and John's here tonight. Maybe write that down. When your range is small, maybe wait for an expansion of range on a breakout. And we've had a few of those IPOs that have done that lately. That will have the buy at B set up, which you're buying at a 5-day closing high of the first 5 days, okay, with a lot of caveats. Watch a bunch of YouTubes on that. YouTube.com/Dave Landry for more on that. And it's a super simple pattern to trade, but you're just simply buying at that closing high, again, with a few caveats. So that's a little outside of the core methodology, but I do throw those out in Facebook, and John Ross does a lot of IPO stuff for me in Facebook. I appreciate that. I really do, for us, not for me. But I get a lot out of it. That's what I'm saying for me. I'm so glad he's there doing that. And that's kind of like an ancillary thing, and you know, not to soft sell you, but that's a good reason to be at least a gold member, so you have access to that. And we had a couple of new old guys come back recently, and I've been glad to have them. And they're pretty active in the group, and really excited about that. So I think some really good things have come from that. Anyway, one thing I wanted to do, and it's not that he pointed this out, but I wanted to point out that since he's been in the service, I think we've done okay, all things considered. And when you look at the S&P 500 over that period of time, from July 5th to today, we had over a 9% run. Well, that's a pretty impressive run, but as a trend follower, this is what actually happened. If you kind of connect the dots just kind of roughly, and all I did here was I looked for a swing high and a swing low, a high surrounded by two lower highs, and a low surrounded by two higher lows. And I just kind of drew the lines around those, but you kind of get the idea. So you can see it's kind of all over the place. Now, here are the stocks that I recommended since January 5th, since he joined the service, okay? That one didn't trigger, 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 that one didn't trigger. So no capital was put into harm's way on these setups. Now, you really don't want to judge the number of setups or anything. And I actually consider not losing money by waiting for an entry. I consider that a minor victory, because if you're missing bad trades simply by not taking them if they don't trigger, then you have more what? You're sitting on more cash for when the good setups do come along and trigger. 1 year I made 68% because I had cash at the right time. Absolutely, Jeff. Yeah, thanks for saying that. Yeah, if you got some money to put to work at the right time, and not because you're flush or you're bored or whatever else, then that's when you're going to make a lot of money. And it's a great feeling. Let's say, let me give you kind of just an abstract example. There's been times where I get knocked out of all my positions and the market's kind of rolling over, and all of a sudden the market begins to implode, and I'll start putting on a short or two here and there. Now, I'm not making a ton of money on those shorts, but I'll end up with just this pile of cash, sitting in 100% cash, and then maybe a short or two here and there. And when the market finally does turn back up, which is much easier to trade the short side, then I'm there and I'm ready to start taking these transitional setups, the bow ties, first thrust, and things of that nature. So yeah, cash that's going to be the theme for the next webinar. One of the themes, at least. Cash is not trash. Okay, why is this in here? All right, let me fix these slides. I don't know what happened. Okay, here we go. Okay, so sorry about that. So here's the stocks that actually did trigger. And like you said, it's only about five. Let's see, 1, 2, 3, 4, 5. Yeah, and then since the email, we've had one more wolf, and then we've got two mystery charts. So I marked to market these earlier today, and the LIF right out of the box was a $1,500 loss. This is on 100K. So we're risking 2% of 100K accounts. And again, that's all calculated for you in the spreadsheet, number of shares and everything. And then this APH short, another one of those cases where we shorted and it hit the initial profit target, but it didn't follow through the downside. This clove, you can see it hit the IPT, but all we made was 150 on the remainder. And then ZK was another one of those IPT and come back in. That's okay. Okay, that keeps the lights on, making a little money here and there. And psychologically, it's also a good thing because you're pulling some money out of the market, and it trains you to not only put money in the market, but take some money out of the market. I read all these horror stories about all these people, and in some cases their hands are tied. So I understand that. But let's say your hands aren't tied, but these people who get into the Ciscos as employees or high level vice presidents, whatever, and they get all this stock, and they become multimillionaires, and then they end up, the stock implodes or whatever, 70-80%, and then they lose all of their money. It's like, well, you're up 10 million, put 5 million in your pocket, Anyway, so the two mystery charts did that trigger, and then there's a third mystery chart I added tonight to the service. So those three obviously did that trigger. So we add all it up. He made on a 100K account, you made $3,636, $3636. Okay. Now, if you compare that to the S&P 500, we made 3.6% in that period versus 9.3% in that period. Well, a couple things. Comparison is a thief of joy, and that's attributed to President Theodore Roosevelt. And don't benchmark yourself to something like the S&P 500. Yeah, it's nice to beat it, and obviously we want to beat it longer term, and we will, okay? But over the short term, intermediate term, there's going to be a lot of times where you're not going to beat it. Compare yourself to yourself. And I feel pretty good about that time period, especially since the market tanked and we shorted it. And then we tried to get on all these trends. And on 3 or 4 of them, we hit the IPT to came back in. We only lost on one trade in that entire period. And if I could always do that, well, you would never see my fat ass again, okay? And that's not a fantastic period. That's a decent period, especially when you add in some of the recent winners, like right before he joined, and I'll show you those in 1 second. So 3.6% return in this shit ain't too bad, okay? Now, let me warn you, got a little fuzzy math following. So I went back and looked at everything over that period of time. And when I captured the spreadsheet, a few weeks before he signed up, we had caught this NNE move. Now, this NNE move was 127% on the second loaf. Okay. And then we actually kind of beat the system, so to say, because there was a gap higher into the initial profit target. Okay. So that worked out pretty nice. That's about, what's that, about $5,000. Okay. Which is 5% on a 100K account on one trade, and it was only over like a few days. You annualize that, it's just absolutely ridiculous. So unfortunately, he missed that one, but outliers are key, and it takes time. And I know it's hard to say, Dave, I'm going to commit to be with you for about 6 to 8 months, and we'll see how it goes. And if it doesn't work, then I'm done. But it might take that long, and occasionally longer, to capture these trends. And you just have to chip away at it. Believe me, it's not an easy thing, especially when, like in a case like me, I've got people dependent on me. It's not just myself. But if it was just me, believe me, I'd feel the same way. I'd be like, when's the next big trend going to come along? Now, so he missed that one, and then he just missed this trade. So that would have added another $1,300 or 1.3% to his account. So that probably would have helped out tremendously. Okay, so you start adding those trades in, and then all of a sudden we're beating the S&P 500. But it is kind of hard sometimes. That comparison's the thief of joy. It's kind of like we hardly had any setups on, and the market's making new highs. And some people are like, "Well, Dave, the market's making new highs. How come we don't have more setups?" Like, well, we're following the methodology. It requires pullbacks. We have to wait for these areas to pull back. Don't worry, we'll get into them eventually over time. Now, you can see there was a loss in here right around 5.9, but that would have been taken care of like a month before we got in this case 2 months. I just want to show you some of these trades, but that would have been taken care of with these two missed trades, the one on 7.1 and this one here. Now, what I found fascinating was over that entire period, and it's just recently when we had these two setups in the portfolio, $13,667 was the most capital that was used during that period of time. So let's just round that up to 14. So 14K, so the majority of the account, 86% of the account, if my math is right on that, was not used during that time. It's like, well, that's cash, that's trash. Well, you know, you make a little money on cash nowadays, okay? So you could do something with that. And if you do I know it's kind of fuzzy math, but if you look at how much money was put up, you only put up a maximum of $13,000, $14,000 in that period. So you did the math on that, then all of a sudden, that's not a bad return, 26.6% versus 9% for the P's. I know I'm kind of doing fuzzy math, so feel free to beat me up in the comments, and I'll see what I could do. Okay, what was the S&P return if you got in and out at the same time? You got in and out stocks you picked, maybe not the 9.3% mentioned. I don't know. So you're saying that if we're getting long a stock, we'd be long the S&P. If we're getting short a stock, we'd be short the S&P. I don't know. It'd be an interesting thing to do, but the point I was trying to make was that wide and loose period of time, even though the market is higher here than it was, yeah, if you're a buy and holder and you just close your eyes, you look pretty smart. But as a trader, there's a lot of zigs and zags in there to navigate. And the thing is, you never know which one's going to turn into the real deal. So again, you have to just keep chipping away at it, okay? So again, cash is not trash. Keeping 80%, 86% of your capital out of harm's way while earning a decent return is nothing to sneeze at. And again, that's one of the many reasons why I'm kind of proud of that period, okay? All right, and I would say this, the more a guru tells you in their YouTube ads how much money they make, the less money you're probably going to make in real dollars when you actually try to do it. And if you're selling options like this stupid kid recommends, and I call him stupid because he's stupid, I guarantee you're going to blow up one day. As I said 1,000 times, many times I've had people, excuse me, present me with a system, and I explain to them that it has an anthill possibility to it, it has a blow-up characteristic, and they start defending it. And I can always tell somebody who's going to make it as a trader longer term, if they're defending a system that's just because it hasn't blown up, it's not going to blow up, is their mentality, and they're defending it, they're probably not going to make it longer term as a trader because they're going to get hit so hard, they're going to end up in a forced reality. And that forced reality, what do they call it? Forced awareness is probably a better word for it from a psychological perspective. That's a very tough thing to do. And sometimes a lot of people don't survive that, at least in the trading world, okay? Do you ever scale out again on a second sale on those long hold? Okay, so what Keith is saying is, okay, we hit the IPT. Do we ever lighten up on more? In crypto, what I'm doing is if I'm up 20% in crypto, I take off half, and I'll show you a few of these trades. In fact, let me get that set up while I answer these questions. So I'll take off half, and then if it runs like 100% or something, I'll take off even more, a little bit more at least, and I'll put that into Bitcoin. That's that mining, so to speak, that I've been doing. and talking a lot about. Now I'll explain all that right now. Let's get this. Let me get the chart shared. I'll jump into crypto and then I'll answer that question. All right, here we go. Okay, so the question is, do I scale out on more? Well, crypto, the bull bear cycle in crypto is so fast. Okay, I go from 100% cash to 100% allocated to 100% cash. All sometimes within 1 week. Okay. So what I do in crypto, let me find a good one here, and this is the one I wanted to show you. So this kid, he wanted to learn how to trade crypto, and what is this? XLM? XLM was moving at the time, so I said, okay, look, this one's making new highs. Let's just buy this one, and then this is a 20% profit target. So I took half off at that 20%. And then I took $25 just for shits and giggles, okay, and stuck it in Bitcoin. And by the way, that has really added up. I mean, when I say really, it's not like a tremendous amount of money, but like 5K or something just by peeling off a little of these shit coins, okay? So I kind of feel like I'm making something from nothing. Initially, I was trading Bitcoin, and I thought I would turn it into a hard asset like silver, it'd be kind of cute or whatever. But this is a lot more fun and a lot more easier, and I think has a lot more potential. Now, eventually, I'm going to have to manage the Bitcoin position too and not be a hodler there. But for now, it seems to be working. But anyway, so right here at 100%, I peeled off a little bit more and stuck it in Bitcoin, and not much, like 25 bucks or so. And then right here at 200% or whatever that was, I peeled off a little bit more. I put limit orders in here to take some partial profits at those levels. So yeah, I will scale out a little bit now. Like the NNE trade, that happened so quickly. That was like over a couple of days, and it didn't stick. But if that would have gone up 3 and 4 and 500%, then by all means, yeah, I would have scaled out a little bit more. It just doesn't happen that often in stocks. It's a really good problem to have. What kind of pissed me off with the NNE, and I'm grateful, believe me, that I made money. But if it would have been a little bit more established issue and had options on it, I could have probably done something to possibly have my cake and eat it too, peel off. In a case like that, Keith, let's say something just goes straight up. It's going to come back down, and you're going to have the mother of all drawdowns, but you don't lose your position. So what you can do in a case like that is you could sell into that, feed the ducks while they're quacking, right? Which I'm going to talk about in 1 second, but spoiler alert. Do that, and then fritter away a small portion of your proceeds on some just crazy out of the money options. And what's going to happen is you're going to get whacked anyway, so you would lose that same amount of money, okay? But in this way, you're keeping the lion's share, and you're just going to, pardon my French, piss away a little bit of money on those options. I used to have a French friend, and when I would say that, he goes, "Dave, that's not French." He's the same accent for all my friends. One guy actually does sound like that, though. Anyway, so let's take a look at the big boy here real quick. Now, I've been saying if we could bust through 100, we'll probably go to 200 really quick. That's not trend following moron stuff. That's just kind of my gut feel. I think 100 is going to pull in a lot of people to the market. Now, not to talk out of both sides of my mouth, but shorter term, when I saw us at 103, 104 later in the day, this morning at least, I got to thinking you're probably going to see some big traders feed the ducks. You've got people that have been sitting on Bitcoin forever, okay? For the early adopters, just people that bought some and didn't even know what it was or whatever. And then you also have institutions who have started to participate, okay? So all of these people, when you have a liquidity, I guess you'd call that, I don't know if that's the right word for it, but it's an event that provides a lot of liquidity, which I guess is a liquidity event, like a major milestone, like a 100K being hit. They use that as an opportunity, as Linda Raschke would say, to feed the ducks while they're quacking. And as I was thinking about it right before I got started here, let's say you've got millions in Bitcoin and you want to unload that because you're like, on paper you're worth 10 million or 20 million or whatever the case is. But if you'd start dumping, and I don't know how much it would take, but maybe 10 million would be substantial in Bitcoin. I don't know. I know that I think it's 0.2 trillion total. Is that right? And then all the other assets are hundreds of trillions. And I saw a very fascinating video on X. I wish I'd have captured the screen. And his point was that even if just a few crumbs from all these other assets find their way into Bitcoin, you could easily have $1 million Bitcoin. Now, I know I'm confusing the issue with facts, but it does make for a very good kind of Michael Saylor type of argument. But you can see we had this spike higher, and then I didn't know this spike lower must have just happened. When did that happen? I didn't notice that one. I must have been getting ready for the show. Let's take a look at the 15-minute. Yeah, it looks like that just happened a little while ago, okay? Probably right before the webinar got started. So that's kind of fascinating. You see, oh, by the way, there's your 30-minute chart. I think if you had unlimited time, you could probably go in and trade Landry like pullbacks on a 30-minute chart in these crypto pairs. If anybody wanted to try doing that, let me know how it works out. So let's go back to the daily. So again, there's Bitcoin. I wouldn't call it down and out because we did 100 and came back in. Okay, I guess Peter Schiff would. They beat him up. I started dogpiling on him. I don't even know who he is. I guess he's an economist or something. He's been anti-Bitcoin since Bitcoin's been about $1,000. So predict early and often, I suppose. I know some professionals who should know better, and they've been poo-pooing it forever, and now it's 100K. It's like, it's crazy. So when these shitcoins are moving, by the way, you could just, again, buy them as they're going up sometimes. So this one here, you can see I bought it right there, and there's my 20% line. This is a leftover purple line from probably another trade that I made. The XLM we just talked about. Kava, for instance, you can see I bought it here and flipped out half here. I might have had a stop in here at some point. That's this yellow line. So when they're moving, you could just buy the ones that are moving higher, provided you have the liquidity, okay, in the individual pair. So this one looks like I traded it. Okay, nice little pullback here. Go back to a couple of weekly charts. I think we talked about that. But look how textbook this little pullback is. How beautiful. It didn't quite get to the 30, but it was a really nice little run and a little pullback. So it looks like I played that. Not sure why I got out, but I know I got back in here, okay, because it was going up, okay. And I'm sorry, I got in here on this breakout. When they're moving, okay, when's the keyword in that sentence? And usually Bitcoin can help you a little bit. But when they're moving, you could just look at the hottest pairs and go with them. Like this looks pretty good, but I think it's kind of thin. This would be one I'd buy, okay? I'd buy it right now. I'm not going to do it, but I'll just put in a line, and then maybe we can revisit it. It's probably too thin, but let's say we bought it there. And then a 20% profit target, we'd look for that, whatever that is. And again, that looks like a good one too. In fact, I might have to buy that. That looks pretty good. Now, I know it's crazy. Now, one thing that I have experienced in just buying these ones going straight up, and again, it seems like you're throwing caution in the wind, but when you're in a rip-roaring bull market like this, these things just go straight up. You have to jump in for the ride. One thing I've noticed quite a bit is there's quite a few of these will spike up, and I don't quite get my initial profit target when I'm buying them going straight up like this. So I probably, in a case like the XLM, this is kind of early on in the breakout, okay? So that's a different story. But if you're buying XLM like on this bar here, just because it's going straight up, then you have this chance that it will spike higher and you won't get that profit target. So to do that, I think you probably will have to watch the screen a little bit. A trailing stop. I was just thinking about this in the shower. I know things I think about in the shower have changed, but a trailing stop in these things would be a godsend. And then I think that would be a strategy in and of itself. Call it bottle rockets or something. And my wife says I had to put my name on it. Let's call them Landry bottle rockets and shitcoins or whatever. We'll wordsmith that. But you do get a lot of those spike highs like that, and sometimes it doesn't hit that IPT. So again, I think a trailing stop would be a godsend. Here's a couple of them long. See, I got in here, and so far it's not working out so hot. And this gala here, I got in here, and so far not so good. So it doesn't always work, believe me. But what I'll find myself doing is I'll just start doing a little bit of a rotation as I have more and more and more. Really good point. Selling options is what got the experts creamed in the GameStop saga. Yeah, I mean, it was a no-brainer. Okay, GameStop. Uh, it's a brick and mortar retailer. They're going to go to zero. Okay, they're going to go the way of is Best Buy still around? Circuit City's not. Best Buy is. Circuit City's gone. They all eventually go to zero. You know, a lot of these, especially a specialty retailer like that in this day and age. But they weren't counting on what was it, Eat the Rich or whatever. It was a good little documentary on what they did with these kids in Reddit got together and the little guys took out the big guys. You know, kudos for them. That's a market. You know, markets are markets. Who cares, right? Okay, what section would focus on for the remainder of 2024? Well, that depends. It depends. We'll take a look. Let's hop into stocks right now. Is any individual crypto pairs you guys want to look at? I'll get stocks fired up. So that's a good question. I let the database tell me where to go. Those three mystery charts were all based on setups that I liked. So I let that direction kind of help me out. There are times when, you know, I think, well, maybe I need a little exposure here or there, but for the most part, I'm just letting the database tell me where to go. So if we take a look, you know, if I had to pick one out the air, software, okay, because then maybe crypto, if we're long Wolf right now, which is not really working out. I got all excited about Wolf when I saw Bitcoin at 104. So if Bitcoin can hold 100K ish or more, then maybe the crypto might be the sector I want to focus on for the rest of the year. But again, I let the market come to me, and I'm looking at setups every day. Software, take a look at software. Okay, software has been melting up as of late, today notwithstanding. So maybe it would be software. It wouldn't be the semis. Okay, semis have gone sideways and just look abysmal. Let's do the market analysis real quick, and then we'll. If you guys have any individual stocks you want to talk about, start punching them in now. And let me check on YouTube for a second here. It looks like I lost the feed. Oh, still got it. Good. Okay. Before we get into stocks, okay. Jeff says he's using a 50 EMA, so he's using a 5% band, and I'm guessing a 50-week closing high on a weekly, and he's using a 50 EMA. So that EMA is going to catch up a little quicker. In my case, like I said earlier, I wanted more lag in the system, which sounds a little crazy, but I wanted enough lag to avoid being whipsawed. Okay, so if you try to eliminate all the whipsaw, what's going to happen is you end up two things. One, you'll end up with a lot of whipsaw, and two, you'll end up curve fitting to the prior data, and the future data will never be the same. And I know I've been around a long time. I know a lot of people, work with a lot of people, I've programmed for a lot of people, and they tend to just keep throwing things at the market to make it work. And I've been not guilty, but in order to kind of keep my job and my worth on these consulting gigs like this, which I don't do anymore, by the way, but this is way back in the day, but way back in the early 90s when I still remembered how to program. You know, I would say, well, let's throw a moving average in, or they would say, let's throw a moving average in or whatever. But you got to be really careful with that stuff because you're going to make your past data look so much better, but your future stuff is not going to work out. That I can almost guarantee. All right, S&P 500. We finally got to new highs. Started a little bit today. We could use a bit of a breather, but I'm glad we cleared this prior peak in here fairly decisively. Nasdaq Composite's actually finally looking a lot better than the P's. We cleared this prior peak in here. We're just off all-time highs. That's looking darn good. So if this thing can pull back in kind of an orderly fashion, and ideally before it does that, maybe bang out some new highs first, we could start seeing a plethora of setups. But for the index overall, I'd like to see it just keep on going up. It didn't have some sort of orderly correction. If you take a look at the Rusty, not as good. You know, Rusty's been all over the place. It finally took off, but now it's coming back in after taking out the prior peak in here. So it looks okay. It still looks good. It's still in an uptrend, and I just wish this pullback was at a much higher level. Okay. So Brian, I don't know which sector that would be. There's only a few weeks left. So Wolf was crypto. I don't know what SGMO is. I don't think it's a sector that's trending. I don't remember it off the top of my head. And then yeah, we'll have to just go. I'll go through whatever stocks come up, and we'll see. And I'll bring it up in Facebook where the sectors are stacking up. All right, let's just take a look at a few of these areas. Gold is really not even worth mentioning. It was off to the races, and now it's beginning to roll over a little bit. I was wondering earlier, will gold be one of those asset classes like this gentleman was talking about? I wish I could remember his name. I'll try to find it in my Facebook, my X feed. I still want to call it Twitter. But I think just my gut is that the alternative investment, like gold's marketed as some sort of alternative investment. I think Bitcoin would be really an alternative investment time 10. I heard some rumblings that the United States might start a Bitcoin reserve. I think it'd be brilliant. You know, cut a $1 trillion in spending and put it in Bitcoin, and that'd be kind of a fun experiment. I mean, free money, right? Cut $1 trillion, throw $1 trillion in Bitcoin. I'd be all for it. All right, gold, the commodity, break it down a little bit. Gold stock's just not looking so hot, so I'd avoid that area for now. The hack, which is cybersecurity, actually hit brand new highs just yesterday. So that's looking okay. I'd like to see it to continue to make new highs, though. IBB and biotech doesn't look too good. Lots of overhead supply there. You see we retrace up to it. So I wouldn't rush out and buy biotechs, although every now and then a biotech stock sets up and looks really good. Unfortunately, you don't have the sector behind you, but you have the overall market behind you at least. And if you like the setup, then take it. But ideally, you want all three cylinders, so to speak, to be firing. All 8 cylinders, but okay, we talked about software. That's looking okay. Transports got whacked today. They're still in a trend, as you can see, but they got whacked. Jets continue to do well. And my strategy here used to be, and I'm joking, of course, is wait for them to go up and then sell them. And that tends to be what airlines do. But very interesting that they're breaking out the brand new highs. Banks so far just pulling back. They're looking okay. Again, I like to see these markets make new highs and not look back. Insurance, none of those markets. Financials, that's not financials. That's health services. Back to the downside, not looking so hot. Pull back to 30, now it's rolling back over. Let's take a look at financials. I'm close. There it is. You see financials trying to rally out of a pullback. So that looks pretty good so far. That's actually a good looking chart right there. Back to the downside, major drugs, remaining a downtrend so far, just pull back to the 30, looking fairly ugly. So it depends on where you look, but for the most part, most areas look pretty good. Telecom just off of all-time highs. Take a look at real estate, kind of toppy in here, bit of a double top in the works. Utilities not doing so hot, but you might notice, or you'll notice hopefully next week when we reveal it, if it takes off, of course. If it doesn't take off, hopefully it won't trigger. But you'll see that I do have a utility play, even though utilities are looking a little questionable. Bit of a triple top or 3 drives to a high. That's 1, that's 2, that's 3. So we'll see how this shakes out. Of course, if you make new highs, this all gets negated. And when a bearish pattern doesn't work, it actually becomes bullish. So hopefully that makes sense. If not, we can flesh it out next week. All right, that's it for the markets. Overall, looking pretty good. Still a little mixed. Anybody on YouTube, anything you want to add? Okay, let's go to Jeff, who says ACHR. Yeah, this is a crazy one. HV 125. Not that I won't trade a stock with HV that high. It just is, it's a crazy one. And you can see it's a little wide and loose and all over the place, but its personality has begun to change. Now, remember, when you're looking at a chart, what is a chart? These little squiggles, what do they represent? They represent buying and selling by people. So this, you're basically getting a look into the people who bought this stock, okay? And they're very excited to buy the stock. They're also very panicky to get rid of it. What happened with GME? Well, a bunch of kids got together and started buying it, and they were just eager to buy. They were all saying, hodl, 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 and put all their memes out there. And they just kept doing that, and the shorts just got absolutely punished and creamed. So the personality of that market changed over to the Reddit boys, okay, the Reddit bros, whatever you want to call them, and they're a crazy trader. The shit coins go crazy. Why? Because people buy them at any price. I'm buying them at any price, okay, because they're just going up, all right? I would not do that in other markets, but in a highly inefficient market, you could do those kind of things. When you're, and again, getting back to what I was saying, when you're looking at the charts, you're looking into the soul of the people who have traded the stock, and then you could figure out some things from there. If you got a big mound of overhead supply, a lot of trading up here, and the stock's right here, well, guess what? These people are going to think about selling when that overhead supply hits. Okay. ACHR enter at new high, kind of crazy HV. Yeah, in general, I wouldn't rush out and buy an individual stock at new highs, but I know from a proof of concept, if you did that with enough stocks, it would work. Of course, having a market at all-time highs really helps, right? But yeah, I wouldn't buy this just because it's making new highs, unless you're going to buy a half a dozen of these at least, or maybe 10 or more. Jeff, was it you that was helping with the statistics a few weeks back? I didn't follow up with you, but how many would it take to get a representative sample or to catch these moves? And I don't know that you could reduce that to statistics, but I'm willing to learn, okay? Anyway, enter at new high, kind of crazy HV. HV is not too crazy. Structure is what's more important than HV, of course. But acceleration of uptrend and breaking of a major base, sort of a TKO. Yeah, this is kind of a TKO move here, although not much of one, and then a little bit more here. This could actually use a deeper pullback, believe it or not, as crazy as that sounds. But that's a decent pullback for this. So I would rather you see you play the pullback back here as opposed to just buying it, making brand new highs. But if you do that, and I know you know what you're doing, but if you do that, do it in a small manner. I think like the gentleman earlier pointed out, I had taken a small position in GRD in because it had its issues. So it's like, for shits and giggles, and I forget what I bought, maybe 400 shares. I'll be happy to dig the trades out next week if you want, but it wasn't a whole lot. I didn't bet the farm on it, okay? Looks like it will either take off like crazy or crash back into the base. If it crashes, no capital put in harm's way. Yeah, it is kind of interesting. Yeah, I hear what you're saying. Is this optionable? Made big bucks trading on this first pullback out of the base with options. Oh, it is optional. Oh, that's awesome. Yeah, so what he's saying is he traded that first pullback. Wow, that's beautiful. That is beautiful. Is this a new issue? A fairly new issue? Not really that new. How do we go backwards in time? Here we go. So what he's saying is he played the first pullback after the base breakout. So it broke out from lows. Let's take a look at that. And so he got in here, okay? It had a few issues back here. I'm not sure that would have jumped out at me, but in hindsight, good eye. And because it came off of a fairly decent base, ideally, I'd like to see this pull back a little deeper, given the magnitude of the move. But wow, nice job. Nice job on that one. All right, any other stocks you guys want me to talk about real quick? Well, I just want to thank everybody for attending. I appreciate you taking time out of your busy schedules. Anything unanswered, Dave, Landry.com. Everybody have a great weekend. I'll see most of you guys and girls tomorrow and Facebook. Everybody else, have a great weekend, and may the trend be with you. Thank you so much.